closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a second more of your time. Let's go into the charts. Bada bing, bada boom. Here we go. Well, it looks like we closed out the candle and we reset the stochastic by 15 points. What does that mean? Well, let's go as we see this diagonal fib level. We are maintaining the upwards mean reversion path of 0.5 of the equilibrium to this upside path. However, if we want to revert completely to the mean, that would mean coming down to here at 19,473. Well, why would we want to do that? Well, you have to look at the liquidity, and by liquidity, this means the heat map provided to you by High Block Capital at $70 a month, which we provide to you daily for free, so please consider subscribing and all that fun stuff. And what does it mean? Well, it means people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And we get to see where those liquidation points are. So who gets burnt to a crisp today? Let's go into the charts and see. So after the live yesterday, we were talking about this character down here at 138 million. The sparse liquidity of the weekend is a treacherous time to trade because you appear like these dots, like pinging on a radar. When there's not much more to ping, they just look at you and say thank you, and then just wham bam, thank you ma'am. They came right back to this guy to a T, liquidated them and bounced off their liquidity. So it's not a coincidence that this happens. And here we go again. You have some other pools of liquidity opening up here as we surged up earlier today, and there was a 185 million in 100x, 185 million in 50x, and 185 in 25x, and they came back to the 100x without fail and just took all those guys back.
Fatality.
Yes. And this is what happens time and time again as you notice these pools. So where are the pools for them to continue to the upside or the downside? Well, on this 1 minute chart, you have 9.5 billion in short imbalance liquidity, which means that they will go up to these zones if they are just looking at this internal pool for the target. And these targets would be at 27.22, stacked quite nicely with some 50x as well, and a 100x pool over here for $129 million at 27.32. So this kind of region is all caked up quite nicely, and we're losing some to Father Time, but you are seeing some up here at 28.527 is stacked quite nicely up here. Let's go expand our vision to the higher time frame of the 7-day, and the 7-day also suggests an upside path to that exact region, as well as there's more shorts to longs being opened as the fear grows stronger. So let's go to the 1 month time frame to see what is going on as we expand our vision to that side. So we noticed that the imbalance to the downside was displaced, and now we are starting to see that shift in character to the upside, perhaps as they pin the stochastics and start to target their imbalance to the upside. Here on this 1 month time frame, it is clear that it is to the upside the imbalance lies. Now we go to the 3 month, and that starts to become less apparent as you see these pools below of $150 billion down at 25, from 25.6 to 25.2. There is $150 billion down there. So do we create our double bottom and bounce out off this liquidity? That seems like the more likely take from this time frame of the 3 month time frame. And this also coincides with the path that we've been laying out for a few weeks now with this bearish trend-based fib extension level. Now hopefully you're seeing why I use bearish trend-based fib levels, because that 236 had you at hello and dropped you down to the consolidation path between the 0.65 to 786, and then when you failed that, you dropped immediately to the 1, and then you started to drop into the 1382. We have not yet cleared the 1382 level, which would also coincide with some fair value gaps and the liquidity below. So that is the $150 billion that still remains in the charts. If we were to drop down, we previously talked about coming up to come down. So if you were to come back up, it would be more likely you make a Wendy's before you go to the upside. The V-shaped recovery has already had a chance to occur, and that was to take you up to here. But that could be just one leg, and then the wick recovery could be that second leg down. Now, let's take a look at the higher time frame of the 6 month and above. We also know that there is 100 billion on the path to 22.5 and below, so there is an imbalance there as well. As we expand to the 6 month, that's when you start to see the path also being caked to the downside quite nicely. And you see all of these 82 billion, 68 billion, 48 billion, 46 billion, all double digits nearing 50 billion each, on their way to the 100 billion at 22.5. Starts to get sparse around there, and you still have your happy campers at 19.4 and below, but not nearly in the same frequency as 22.5. So if it were to go down completely, 22.5 would be a nice divergent stopping point. And let's see if that actually coincides with a fib level of some kind. If we take this fib from top to top here and put it in our pocket. So the 22.9 region is not where it would be. It would be at the 22.5 region. So that would be your 786 level maybe on this range. All right, so yeah, if we go to the yearly time frame, that is where we start to see the other side of the story, which is the narrative structure being paved on the external range to the upside. And this is what takes time to be paved, as you see these 100 billion per zone up here at 33.2, 116 billion, 32.8, 100 billion, 32.4, 114 billion, 78 billion, 33.6, 82 billion, 34 even, and this entire path up to 34.8 is caked up with double digits. Now you cannot see that on the time frames below, so this is where the external range juxtaposition starts to have you at a pause and say, well, based off of what's below versus what's above, sure, you do have $207 billion at 15.2, but that's a mighty big drop and would cause a black swan to occur to go down to that region so quickly. So is the narrative structure still on to go up to these regions? It sure is on this time frame. So that's what brings me pause, because it has done that before, where they leave some liquidity into the charts, go down to go up. So are we just going down as a steady correction to eat some of these 41 days of longs, which we've been laying out for you here? These 41 days of long consolidation need to be destroyed before we make our path to the upside. In a similar fashion, we did that here. So we knocked out all of these longs before we shot it up at the Silicon Valley Bank failure. So it is False Move Monday today. So what does that mean for the charts? Let's go and look at our oscillators and the Fibonacci on the regular Binance chart. And we'll go back to where we left you yesterday. So yesterday we talked about going down based off the cloud, and it went down just after the stream to hit that liquidity and bounce out, and this fulfilled itself. Its destiny is over, so we can delete it. It went down and up, as we said, basically going sideways, but you could have played that as well. So we're going to take a look here into the pools of the fib levels. So let's go to the daily time frame. We're going to work from the weekly on down, and we're going to just throw on our oscillators and weekly. Okay, so we're going to turn on our oscillators as well, because I think we already figured out the fib levels quite nicely. So here we go. Let's turn on Momentum Master, link in the description for more. If you're new, shout out to anyone here that is new or may be new. You go to the momentummaster.info, scroll down to features, toggle everything at your leisure, and read about the components individually if you like. For example, today, what are we going to look at in its prominence? Well, we saw the adaptive previously. Last week we were talking about the cross down event that we were starting to receive, and we got, and that cross down preemptive call that you could have seen at the rejection of this adaptive weighted moving average combo here would have had you at hello for a downside short play, and that could have gotten you paid as well. And if you look at the weekly stochastic now on Momentum Master B, we did not get the alarm. I was expecting an alarm cross, which is strange. So we've actually bounced off of the average of the Williams here. Instead of crossing down and giving you that alarming signal, there could be a bounce potential in off of the average of the Williams. And we reset from 47. I was watching this before live. It was 47 down to 35. So we reset 15 points of stochastic data without really giving back so much. Now, does this mean we're going to come down and stab down as we did here? The interesting thing to note is on this reset here of the stochastic, we dropped about 22%, and we only reset about, let's see, we reset about 21% of the stochastic data. All right, well, not even if you go by where that all started, which is around here. it was only about 14% of that stochastic data. So here we started our descent, and we have reset nearly 66% of the stochastic, and we have brought the average to the point where we could potentially bounce off of and double top here, or triple top, creating a shoulder, head, and a shoulder, perhaps, of a Williams bounce. The money flow on the weekly is beneath the RSI, which is a good sign for a long burst up. Similar fashion here, you had the hidden bullish divergence on the money flow, and the RSI, it was beneath the RSI, which shot you to the upside. So are we going to see something like that this week? I have no idea, but the interesting thing to note is that we could have dumped a lot more furiously, and we did not. So that is something that gives me pause. The weekly cloud is also showing the strength. You're seeing still more thickness to it than weakness. It's not wavering so much. If you look at this, it has increased in volume over time as opposed to thinning out in volume. And so if we go to the 3-day and the 5-day, the 5-day closes tomorrow. So we can take a look at how the 5-day resets here. We have previously opened up the Williams on this time frame, but it's not in the same open beak style. It's kind of almost closed mouth style, so it could come back up here for a false signal. And if we go to the 3-day as well, closes in conjunction with the 5-day. This one has more of an open beak momentum style to the downside. When this closes out, you should reset the stochastic completely, if not already. It looks like you're at 1 already, so you could round this out. The volume is tapering here on the 3-day for the sell-off, could be over. If we go to the daily time frame, the daily time frame is attempting to create a rounded out structure on the Williams and starting to come up ever so slightly by 5 on the stochastic RSI. The money flow is beneath the RSI, suggesting it could come back in. The MACD has yet to cross to the upside, so we have yet to see some bullish narrative step up to the plate here, but the Williams is on the oversold path. It could be oversold slightly more, and I would like it in a better position here. However, if we go to our 22-hour time frame, we see that this rising sun event did occur, but did flatten out after that occurrence, so there's not really a entry of volume just yet. The one thing to note is that the money flow is beneath the RSI here on this time frame as well, and you're starting to see the momentum of the stochastic RSI take off, as well as a MACD, leading MACD line cross, which you can also get alerted to your phone using Momentum Master B. How do you do that? In case someone out there has Momentum Master B, you go add alert to Momentum Master B, and you can say pump or dump. And all that means is when it crosses to the downside, it means it could be dumping. Pump means it could be pumping. So you could set that to any time frame you like. I normally set it on the 5-minute just so I can see what direction the asset was last at. So if it says dump as the last message on my phone, that means it has been going down last I saw. All right, so let's go into that. We already established that the cross up event on the 22-hour time frame has occurred here. So when these cross down and cross up events do occur, something is worth noting on the baselines here. That's what the baselines will have you tell. These are your first signs of reversal. So if you start to see them scoop the price like this in a ice cream scoop angle of 35 degrees or so, and start to cross over nicely beneath the price like this, this is a potential bounce idea where I would not be looking to short it, necessarily speaking. And looking at the 12-hour doing the same as well. So you got that crossover event on the 22 and the 12, and I believe the 6 and the 4 have that for you as well. If we look at the 6-hour, that has been crossing and holding the slim boy baseline, although flirting with the idea of failing and going to the fat boy. So if we go to the cloud is also still thick on the 6-hour, although starting to curve, which is the angle we like to see if you're trying to go long. because it would be implying that the momentum in the wake of the ship is shifting. So are you going to see this kind of shift here occur? If you go to the 4-hour time frame, you can see that the cloud is starting to thin slightly and also curve. We had our previous stab up to the cloud, and we always talk about what happens when you stab the cloud when it's still thick. You see that rejection. If you can't pierce through it, then you get rejected off of it. And what that does is that kind of like knocks the ship, it's like correcting the ship's direction. So you're starting to see this kind of potential redirection of the momentum here on the 4-hour time frame, the thinning out of this idea here. And you're also holding the baselines here. This wick looks like it could be screaming out recover me in some way, shape, or form at some point. The 4-hour has reset some of its stochastic, which was interesting to note. Previously you had pinned stochastic all weekend, and now with these last 4 candles or 3 candles, you have reset about half of that. The money flow is coming above the RSI, which is implying a dump here for the 4-hour time frame for that to reset. If we go to the 6-hour time frame on Momentum Master B, you're also pinned on that. You did have previous money flow bullish divergence here and on the 4-hour bullish divergence, which was having us kind of come up here. Money flow is coming above the RSI here, could come down to reset some of this and create a double top scenario of some kind. It looks like you got the 12 and the 22 versus the 4 and the 6 at this time. So you have the ambiguity of those 2 time frames battling each other. The 12 hours trying to play itself out, but not really going anywhere. You're going sideways as this is going up. That is implying a resistance to the upside. And if we go to the hourly time frame, we can see that the hourly time frame has reset in such a manner. The Williams is coming down and the MACD has crossed down back here with the cross down event of the baselines. It looks like they're going for some liquidity right now. Let's see who they're attacking. And as they drop, you see these bubbles open up here, so there's more shorts opening too than longs as they drop down here. So if they hit this 2667 character, this 50x $185 million character, and maybe his partner in crime, that 53 million at 2661, you can knock these noodles out of the game. And include anyone else still over here. You got a 50x guy down at 2629 that could stand being knocked out as well. And then they could start to make their way back up to here. Remember, it's false move Monday, so they do one thing to do the other. So there is no real intent necessarily clearly outlined in the first day of trading of the week. That's why it's called false move Monday. So be careful out there. If you're in a trade, please always consider paying yourself. And you could come down to these regions here. Okay, so if we maintain this super trend level, then it could just be a liquidity grab, stop hunt rise to the upside. So I don't believe any of the narratives. I've watched some of these other YouTubers, and I wonder how they derive some of their things without looking at the liquidity. The liquidity has all the answers, really. You just find the imbalances between them and then look for the momentum when the momentum shift is occurring. So momentum plus liquidity equals win in my book. So we're currently in the Asian range. Asia normally likes to dump it on average. You just go back to Asia in general, they dump, they dump, they dump. Like Asia has this dumping habit they like to do. And if they pump it, they normally pump it into Hong Kong, which is like 10:30-ish, about an hour from now. So they do something like this where they pump it up into 10:30-ish my time, and then they start to fade it into London. So if you're looking for a short, you see like that pump into the 10:30, 11 o'clock my time, about an hour and a half from now, and you kind of could see that fade. But if they're starting to dump it right off the bat, then it could be one of these kind of fade out things from the beginning. But if they're buying this back, this could be the pump to sell it off. This is one of these indicators. This is free, called ICT Kill Zones by Tradinator. It will tell you the time frames, which you can see the different sessions and how they interact. And so when certain streamers go live around here when London is closing, it has nothing to do with them. It has everything to do with the banks closing in London and handing the baton off to New York. And yeah, so that's where you can start to look for confluence in the kill zones here. All right, so where does it all stand? Well, we reset some of the 4 hour. So let's recap. So we reset some of the 4 hour, which is good to note. The daily and the 3-day are low. You see the thumbs up over here on our screener. The weekly has now been reset to 33 by the looks of it. So it's okay. You're getting bullish divergence on the money flow and the RSI as per our divergence crystals here. So this bullish divergence on the 4 hour has yet to play out. You stabbed the cloud on the 4 hour. The 4 hour cloud is curving in such a manner here. So what do we want to see? Well, mainly if you're going to go to the upside, right now it's ambiguous for a short. So there is really no short idea that I would be taking, because you could see this massive push to the upside to liquidate some of these pools up here, and I kind of expect that they will be based on this thickness of the time frames here. So what you would try to do is, if you're seeing a fatigue of this super trend up here in this region off of some of the pools here, namely the top range here at the balanced price range fair value gap up here, the BPR up here at 28K, which would be this kind of region here, which is filled with stack liquidity, including a lot of 100x pools. So these 100x pools could be targets in confluence with the stacked 25x and 50x up here. So based off of how many bigger bubbles of shorts are opening to the smaller bubbles of longs, once they take out some of these longs that opened up early here, and they take those guys out, then they could be stacking up an attack to the upside. And just to spite stochastics traders this idea of resetting, the one thing that is kind of implying a struggle here is this money flow on the 4 hour kind of gap between the RSI here. If you go to the higher time frame, you see this gap also occurring on the 6. So the 6 and the 4 once again are battling the 12 and 22 by the looks of it, and the 12 and the 22 are struggling. 12 is struggling already halfway to being overbought without actually going anywhere. 22, the money flow is extremely beneath the RSI, which could imply a 22-hour uppercut to the face at some point, which is why I don't challenge the 22. The last time somebody shorted support, if you recall, it was back here, and this was also when the 22-hour was low. So you don't want to deal with this money flow divergence beneath the RSI thing before, even when the 4, back here, let's go back here, all right? Let's just humor me for a second here. We'll go back to before we went up here. So if we go to the 12-hour time frame here, I went to the 13 by mistake, 12-hour. So here the 12-hour was kind of holding in a different manner. It wasn't coming up to 50 necessarily. It was implying more weakness, but it was still in the oversold status. And this is also when we had a 6-hour, 4-hour versus the, see, we had the 6-hour overbought, and we had the 4-hour overbought versus the 6 and the 12, or the 12 and the 22. So we had this coming down in such a manner, and then what happened? The 12 and the 22 won. So you got a burst to the upside, even though it was short-lived and came back thereafter. It was something you did not want to short per se. And I believe that was also on a Monday. It was coming off into the weekend. Was it? I don't know, the Monday was to the downside. It was Tuesday, Wednesday play. But either way. So either way, you try to find these double bottom events. So we're at the single leg to the double bottom. So coming back down ever so slightly to grab some of this wick would be the more realistic play to see how much do they come back for. Do they come all the way down and make an extended W to the downside, similar to this, and then head back up here, or what? That is the question. You're definitely in no man's land. Not my cup of tea to enter. You want to enter off divergence and liquidity grabs and that confluence of the different time frames being oversold in your favor and lining up nicely. Currently you have the 6 and the 4 versus the 12 and the 22, so I would wait for their alignment to occur in better fashion here. Probably around London or New York you will see some sort of other time. I will try to go live in New York, back to the regular live schedule before New York Open, to give you a little bit more of an update here. So you're seeing the baselines fatigue out, cross down beneath, above the price here in the opposite fashion, where we come to the downside. So you're seeing this Williams reset as well. It'd be nice if the Williams came down completely. And we just went sideways basically the entire time. So it is now Monday in Asia. What is Asia going to do to pass the ball to London? And how is London going to behave thereafter is the question. So we got these pools to the upside that we haven't forgotten that we've marked off on our charts. They came back to one of them, which we deleted. Do they come up to the rest here? It makes sense in the narrative structure that they would. If you were going to go to the downside, they have spawned enough divergence off of eating half of this to at least justify coming up to eat some of these guys before they come down. So it is of my belief and past experience in the market to see that they come up to here, knock out some of these guys on this BPR range, fair value gap, and go slightly above to these guys. If they were going to continue lower, then they would consider it from that point. So right now I'm not necessarily clear whether it would go long or short, whether they're going to drop down to there from here or go to this first. It would make more sense to me that they would go up to here, since they've cleared out a large portion anyway, and those that are remaining from this external range have been there for 41 days, so they're not really going anywhere. They got them hook, line, and sinker as it is. All right, so they would rather see these guys get destroyed than those, in my humble opinion, but anything is possible. And then at that point you get a W formation out of here, perhaps. All right, well, let's see how the chat's doing, and then we will bid you adieu. I think False Move Monday is a treacherous time to trade, so we'll see what's up. How's it going? Let's go take a look at the Ireland. Always reminds me of the USDT dominance, so let's do that. Shout out to everyone here. So it went to some level that we are talking about, bounced off this 618. Let's go to the daily time frame real quick. I don't know where we marked that, when we marked that off. It was definitely before March 12th, but we marked off this arrow here for a fair value gap that we came back to recover. So we did see a bounce off the 618 to the upside, which means people were kicked out into USDT. Definitely with the drop to the downside, we did see that USDT dominance grow as people are getting kicked out into USDT, and this volume is increasing. Are we going to see that continue? On the daily time frame, it looks like we are overbought in terms of lots of people are now in their USDT looking to get back into a trade, as on the 3-day and the weekly and the daily as well. So by being overbought means people are itching in their USDT to enter the USDT back into something and drop the dominance. So the dominance is implied by people being tethered up in their USDT, and when it's overbought, it means they want to enter a trade. So people are in their positions looking to enter a trade on the daily, the 3-day, the weekly time frame. So it's starting to get the baselines above the price here on the USDT dominance, which implies there's some USDT looking to leave USDT and enter a trade, at least on a retrace idea to the downside, to retest some of these Fibonacci levels that we outlined for you in the past, based on this bullish trend-based fib level of this rise retrace to the 618 idea. And we came up into the 11382 region, similar to Bitcoin, and dumping down to that 11382 region. And so they went halfway into that, similar to Bitcoin, and looks like they might retrace back into one of these levels similar to Bitcoin, and then kind of bounce off that point and perhaps continue to knock people into that oblivion up here. But we don't want to get ahead of ourselves, so we'll just leave it at that and say that just based off the failure of this baseline above the price here, if it maintains that and closes the daily candle with that thin boy beneath, or it turns red and fails the fat boy, then it's showing this fatigue starting to set in. Now this started to occur over here, and then you started to see the dominance drop. So that's why you see the baselines above the price implies fatigue to the downside. And so this USDT dominance implies that you could be getting that USDT injected back into trades. And if we go to the BTC dominance, the BTC dominance is also has the baselines above the price and starting to fatigue out. You were dropping some dominance as people were losing their trades. So this getting kicked out of BTC into USDT, then both dropping, this dropping while the USDT rising, implies that people were getting kicked out of BTC into their USDT trade. So is this going to change is the question. So we have a 3-day and 1-day ready to go on this, and you're starting to reclaim a little bit of the baseline. The thin boy baseline is starting to get reclaimed here. You have yet to cross over on the BTC dominance, which means if BTC dominance does go up, this means more people will be entering BTC again. So if people are itching in the USDT to get back into some trade, and BTC dominance is starting to imply bullishness, that means people want to put that USDT into BTC. By this measure, if you see this crossover event occur and the baseline's holding here and BTC dominance rises alongside USDT dominance dropping, then you could see this kind of entry into the BTC, which does kind of imply this narrative of a bounce to the upside to eat some of the short liquidity here. All right, that's about it. I got to go to my friend's house, and we're going to try to trade the Asian session and try to work on some ATM strategies for futures trading. So I will catch you guys on the flip side. I don't have time to go over any other altcoins and things of that nature, but I appreciate your time nonetheless. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll catch you on the flip side, baby. And we will see you on New York Open. Peace.